Welcome to the groundbreaking podcast, The Aleynikov Case and Wall Street Algorithms Hacks You've Never Heard of.
Yeah.
Even having read all the research, the audacity of this story still gets me. Today, we're diving deep into a case that, well, it really cracked open the secretive world of Wall Street's algorithmic trading. We're talking a programmer at Goldman Sachs arrested for allegedly taking his code.
Right.
But trust me, this wasn't like pilfering a company pen or something.
Not at all.
Goldman itself reportedly considered it the most substantial theft the bank can remember ever happening to it. So, yeah, big deal.
A very big deal.
Get ready, because this case pulls back the digital curtain on the real power brokers of modern finance.
It really does. It's this fascinating intersection, isn't it? High finance, cutting-edge tech. The 2009 arrest of Sergey Aleynikov. He was this highly paid programmer at Goldman, one of the biggest banks.
Yeah.
It might sound like, okay, standard intellectual property squabble at first.
Right, you hear about those.
But as we dig into the details, you start to see it reveals this much more complex and really influential landscape. It's this world where algorithms, well, they've basically taken over the market, so the dominant force now.
Okay, let's get into the specifics then. 2009, Sergey Aleynikov, he's pulling down, a cool $400,000 a year at Goldman.
A very comfortable salary, yes.
And he decides to move on, gets a job offer from Tisa Technologies for a staggering $1.2 million.
Huge jump. Life-changing money.
Exactly. Big promotion, right? Except, on his very last day at Goldman, he uploaded some computer code to a server somewhere in Germany.
Right. That was the key act.
And that single act led to his arrest. At Newark Airport, no less.
Yeah, just as he was leaving.
It sounds like something straight out of a thriller novel, doesn't it?
It really does have that dramatic feel. And Goldman's reaction, just as dramatic. It really highlights what they believed was at stake.
So what was at stake for them?
Well, this wasn't just some employee walking out with a few digital files, you see. For Goldman, it was perceived as a fundamental threat, a threat to their competitive edge.
Okay.
And that intense reaction, it stemmed directly from the nature and, crucially, the value of the code involved.
The algorithm.
Exactly. Their high-frequency trading algorithm.
Okay.
They'd sunk a massive amount into it. They bought the Cortech back in 1999 for $531 million.
Wow. $500 million.
Yeah. And this thing was generating millions upon millions in profit every year.
So it wasn't just software.
Oh, no. It was a core driver of their profitability. Their golden goose, you might say.
Millions every year. That really puts it in perspective. So this algorithm was like Goldman's crown jewel.
Pretty much, yes.
And you mentioned earlier that human traders aren't really the main force anymore. Can you expand on that a bit?
Sure. I mean, that traditional picture, traders yelling on the stock exchange floor.
Yeah, the movies love that image.
It's largely a relic now, a thing of the past. Today, the overwhelming majority of trades executed automatically by these incredibly sophisticated algorithms.
Automatically. How fast are we talking?
Unbelievably fast. They operate at speeds. Well, they process and execute thousands of transactions per second.
Per second.
Per second. Way faster than any human could even react, let alone make a decision. These algorithms, they're designed to spot tiny, minuscule price differences across different markets.
Arbitrage, basically.
Tiny arbitrage opportunities, yes, but also predicting short-term price movements based on analyzing just vast amounts of data. And they do all this within milliseconds. 1,000th of a second.
Milliseconds. It's hard to even wrap your head around that.
It is. And in today's financial markets, these tiny, tiny advantages, when you repeat them millions of times a day, that's where the really significant profits are made.
Okay, I get it now. Milliseconds. So if these algorithms are the ones actually doing the trading, it's suddenly crystal clear why Goldman saw someone potentially taking their code to a competitor as, well, a major crisis. It really is like a master chef losing their absolute secret recipe book in the most competitive restaurant town imaginable.
That's a perfect analogy. It fits perfectly. And the secrecy around Alenikov's trial, that just hammered home how valuable they thought this code was.
How secret are we talking?
Well, the courtroom was actually sealed, closed off completely whenever the algorithm itself was being discussed.
Seriously, sealed?
Yep. Exhibits, documents related to how it worked, all kept hidden, away from public view. Goldman's paranoia, or maybe just extreme caution, was palpable. Their absolute priority was keeping the details confidential.
That level of secrecy, it sounds almost excessive, but I guess, in that kind of environment.
It's a zero-sum game, remember?
Oh, you said that. For one firm to win, another might have to lose out.
Precisely. So if a rival, like Tatiza, where Alekov was headed, gets their hands on your algorithm,
What could they do?
they could analyze its logic, figure out its secrets, maybe replicate its successful strategies. Or worse.
Worse.
Develop countermeasures, exploit its weaknesses, or even engage in something called front-running.
Front-running? What's that?
Imagine a big player, like Goldman's algorithm, is about to place a huge buy order for a stock.
Okay.
If you know that's coming, maybe because you know how their system behaves, you could quickly buy a small amount just before their big order hits.
Because their big order will push the price up slightly.
Exactly. Then you immediately sell your small amount for a quick, almost risk-free profit.
I see. So knowing how the algorithm works is everything.
Everything. These algorithms, you have to think of them as proprietary money printing machines. That's how the banks see them. And the risk of that blueprint, that code, falling into the wrong hands, it was just enormous for Goldman. Unacceptable.
Okay, I definitely understand Goldman's perspective. Now protect the money printing machine at all costs. But what about Alenikov's side? What was his defense? He argued he wasn't taking the whole machine, right?
Correct. His claim was quite different. He argued he was only taking code related to open source components.
Open source, like freely available code.
Yes, exactly. Stuff that's out there for anyone to use and modify. He felt these parts were distinct from Goldman's truly proprietary innovations. He even made a comparison trying to downplay it, likening his actions to something relatively minor, like speeding in a car.
Speeding versus grand larceny of a $500 million system. Seems like a bit of a mismatch in scale.
Well, yes. But this is where the case gets really fascinating. If there is a spotlight on this complex, often tense relationship between proprietary software and the open source world, even within these super secretive Wall Street firms.
How so?
Because many of these incredibly advanced trading systems, they aren't actually built entirely from scratch.
Really?
No. They often incorporate and heavily modify existing open source software, code that's freely available, that anyone can download and adapt.
So they use free stuff to build their secret weapons.
In many cases, yes. They leverage that existing foundation. And Alekov actually shared an anecdote about this. He apparently inquired once about contributing some improvements he'd made to a piece of free software back to the open source community. You know, standard practice, helps everyone.
Makes sense. Give back.
But he was allegedly told, nope, that modified code, it was now Goldman's property.
Wow. Okay. That feels like a real clash of cultures.
It absolutely is.
So these huge, powerful financial institutions are like taking advantage of the collaborative work of the open source community.
Leveraging it, certainly.
Making their own tweaks and modifications and then slapping an absolutely ours label on it.
That seems to be the dynamic, yes.
To the point where they'll pursue criminal charges if a programmer tries to take back something that started as free code.
That's what happened here.
It feels a bit like, I don't know, building a huge mansion partly on public parkland using public materials and then trying to arrest someone for taking a paving stone that originally came from the park.
That's a very apt comparison. It really does highlight the fundamental tension. It raises huge questions about intellectual property in the digital age, doesn't it? Where do you draw the line on ownership, especially when you're modifying existing free tools?
Yeah, it's really murky territory. And then there was another layer of complexity, right? Aleynikov apparently claimed that the whole algorithm had become so intricate that no one at Goldman really knows how it works as a whole. Is that possible?
It's actually quite plausible, and it speaks to the evolutionary nature of these incredibly complex systems.
Yeah.
Think about it. Over time, code gets added, changed, patched, integrated with other systems.
Right. Layers upon layers.
Exactly. The original architects might move on. Different teams work on different parts. The interactions between all these components can become so incredibly nuanced, so complex, that, yeah, it's entirely possible no single person has a complete end-to-end understanding anymore.
A black box, even to its owners.
In a way, yes. And that inherent complexity can bring its own risks, its own potential vulnerabilities, even for the firms relying on them.
Fascinating. So, okay, despite all this complexity, Aleynikov was initially convicted, right? Back in 2010. He was, yes. And faced a pretty hefty sentence, 8 years in prison. 8 years. But then something changed.
Yes. In 2012, a federal appeals court overturned that conviction.
Overturned it completely. Why? What was the crucial legal point?
The core of the appeals court's ruling came down to definitions. They found that the source code itself, in its purely digital form,
Yeah.
didn't meet the existing legal definition of tangible property or goods under the specific theft statutes he was charged under, like the National Stolen Property Act.
So because it was digital code, not like a physical object.
Precisely. The legal framework, written mostly for physical objects, hadn't really caught up with the realities of digital assets. Think about it. You can copy and transfer code infinitely without physically taking the original away from the owner. The original file still exists. It's not like stealing a car where the owner no longer has it.
That sounds like a massive loophole in the law back then.
It was.
You could essentially copy something incredibly valuable, maybe worth millions or billions, but because it's just digital information, it didn't count as traditional theft.
Under those specific laws, that was the interpretation, yes. This legal gap had huge implications. It really exposed a fundamental challenge. How do our legal systems handle digital property in a world that's increasingly digital?
Yeah, clearly something needed updating.
It did. And the significance of the Aleynikov case was actually a catalyst for change. It spurred legislative action. President Obama later signed a law, the Theft of Trade Secrets Clarification Act, I believe, aimed specifically at closing this gap and strengthening legal protections for digital assets and trade secrets like source code.
Wow. So this one programmer's case not only gave us this rare peek inside Wall Street's algorithms, but it actually forced the law to adapt to the digital age. That's pretty impactful.
Hugely impactful, legally speaking.
What about the programmers themselves, the people like Aleynikov working in this super specialized field? What does all this mean for their careers?
Well, they face this really unique dilemma. It's quite a predicament. They spend years developing highly specialized skills, working with these incredibly complex proprietary systems.
Skills that pay really well, judging by Aleynikov's offers.
Extremely well. But here's the catch. Those skills might not be easily transferable to other companies or other types of programming. Their expertise, while valuable within that specific firm's ecosystem, is essentially tied to systems they don't own.
And they can't take the code with them, obviously.
Absolutely not, as this case demonstrates. So when they want to move jobs, even for a massive pay rise like Aleynikov was offered, they might find themselves having to essentially start over, learning a whole new proprietary system.
So they build up all this deep knowledge.
Yes, deep, valuable knowledge.
But it's locked to one place. When they leave, they almost have to leave that knowledge behind.
Exactly. Some programmers have described it as a kind of knowledge purgatory. You know so much, but you can't take it with you, and it might not apply elsewhere.
That sounds incredibly frustrating and limiting for these really smart, highly skilled people.
It is a strange paradox of this part of the modern economy. High value, but low portability for their core expertise.
And it's all part of this bigger picture, right? This algorithmic revolution you mentioned.
Absolutely. It's fundamentally reshaped our financial markets, completely transformed them.
How so? Beyond just speed.
Well, speed and automation have become the dominant factors, yes. But it means that traditional analysis, looking at a company's fundamentals, its long-term prospect, that often takes a backseat to just pure speed and predicting tiny short-term fluctuations. Trading decisions are increasingly made by these complex computer programs, not humans weighing pros and cons.
So the human trader role is shrinking.
Dramatically. Many traditional trading roles have become obsolete, replaced by quants, programmers, and the algorithms themselves. And the potential for profit for those firms that develop the fastest, smartest algorithms, we're talking billions, potentially.
Billions.
It truly represents a massive shift. You could call it finance's own industrial revolution, maybe, powered entirely by lines of code.
Finance's industrial revolution. I like that. It captures the scale of the change. And the really remarkable thing, when you step back, is how hidden most of this is.
Right.
These incredibly powerful systems are driving so much economic activity, influencing global markets.
Yeah.
Yet they remain almost totally opaque to the vast majority of the public.
Exactly. We hear about market crashes or surges or volatility.
Yeah.
But the underlying mechanisms, the actual algorithms making buy and sell decisions in microseconds, they're largely invisible, hidden from view.
Which brings us back to why this Aleynikov case was so significant.
Precisely.
Yeah.
It was like a flash of lightning that briefly illuminated this hidden landscape.
Yeah.
It provided this rare, unexpected window into what many would argue is the true engine room, the real power center of modern finance.
And forced some really important conversations.
Absolutely. It forced discussions about the value and ownership of digital information, the ethics of using open source code in proprietary systems, and the just immense, often unseen, influence these algorithms wield over our entire economic world.
So just to wrap things up, we've really peeled back some layers today. We've looked at the incredibly high stakes of algorithmic trading, seen how the Aleynikov case exposed these blurred lines around digital ownership.
Yeah, the law struggling to keep up.
Right. And discussed the profound and still ongoing impact that pure computer code is having on global finance.
It's a story that really makes you think, doesn't it, about the invisible forces shaping our economic reality every single millisecond.
It definitely does. It's a powerful reminder that, in the 21st century, lines of code can be worth fortunes.
And the legal rules, the ethical frameworks for dealing with that, they're still very much being figured out, still a work in progress.
Well, this has been a truly eye-opening deep dive. Really fascinating stuff.
It certainly has been a compelling case study.
See you soon with another story like this.